Hey friends, today I'm going to show you how you can retire early with a lot less money than you probably ever thought. If you've ever asked around about retirement, a lot of experts, your financial planner, or even financial gurus will probably tell you that you need approximately $1 million to retire. Now others that you've asked probably have said maybe somewhere between $400,000 to $800,000 to retire. And while I completely understand how they may have come to these numbers, considering the average cost of living these days, I think people tend to overlook two things. Number one is how money can work for you before and after you retire. And number two is how time and freedom really buys you much more opportunity than you can probably imagine right now. What I hope to show you in this video is that you can have financial freedom with a lot less money than you probably think. As Sir Francis Bacon said, knowledge itself is power. So here are just 3 simple steps to help you achieve financial freedom with a lot less money than you think. Step 1 is probably the easiest step, and that is to hit that like button and subscribe to this channel if you haven't already. Because I talk about the specific strategies that will help buy you the financial freedom to free up your life and time. I really want to help as many people as I can. So all I ask is that you like this video and comment below with any questions that you might have about retiring early. Okay, so step 2 is figure out how much you need to live each year. There are so many factors that would make this different for everybody, such as where you live, how you grew up, how many dependents you have, etc. But generally speaking, I believe $70,000 a year is a very generous amount to live off of. And yes, that's true for even if you're living in California. Now before you begin to chew me out on state income tax, how you wouldn't be able to afford a house, raise your kids, yada 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 yada, believe me when I said you'll still be far better off than a lot of people around this world. I've traveled through Myanmar, Laos, and some of the poorest places in Southeast Asia. And while yes, cost of living is much lower there, their wages still will never even come close to the privileges we have here in the West. Step 3. Okay, so if you're able to establish that $70,000 is enough to live off of, or somehow make that work for you, the next step is really figuring out how you can make that $70,000 a year without really having to work. Hence what this video is all about, how to retire early with less money. So there are several ways you can go about this. Most people and probably financial advisors would say put it in bonds, safe dividend stocks, or safe investments. Whatever safe means, given the inflation rate this year is 7.5%. And while investing in safer bonds or safer investments typically makes sense, given the inflation rate of 7.5%, that may not all make sense, especially in these times. And that's why you would really also need $1 million to retire if you're invested into these safe investments. But what if I told you there was a way you can make 20 to 40% average annual returns and not even have to use your own money? Then how much money would you need? And is that too good to be true? Okay, so here is where the fun begins, and hear me out. To understand how this works, we need to know a little bit about 2 things. Number 1 is option trading, and number 2 is margin. If you don't have a really deep knowledge into options trading and margin, that's completely fine. If you subscribe to my channel in time, you will learn more. So options are contracts and derivatives of stocks that you can use to leverage shares. What that basically means is that you can bet a stock will go up or down using less money than you would if you just bought or sold stocks. Every contract is always equivalent to 100 shares of a company. There are well over 5,000 and growing companies that have listed options for trading. Most large companies are optionable. The options market these days have exceeded the total daily stock market volume trading itself, trading at $405 billion. As opposed to the value of options traded publicly is over $450 billion. You can trade options with almost any brokerage when you apply for an options level account with your brokerage. With options, essentially you can either buy or sell an option. At the most basic level, there are 2 types of options. a call option, and a put option. Now this is way oversimplified, but basically a call option is betting a stock will go up or down. A put option is like an insurance for if a stock goes up or down. When you buy or sell an option, you are buying the right to buy or sell shares at a set price, and you pay a price for that option, which is called a premium. You can learn more about options through my channel, but let me get straight to the strategy that will help you retire early. Options can be risky if you're buying options, but when you sell options, you actually reduce the risk while also limiting your upside. In other words, you're not trying to get rich quick. In the case where we want to retire early, we're going to go the safest route I know with options, and a strategy that Warren Buffett often utilizes himself. We're going to simply sell put options, particularly put options far out, to collect more premium up front. What that means is if the stock falls to a certain price, we'll be forced to buy 100 shares of that company. But because we collected so much premium already, if the stock falls, we get both a discount on the stock and the high premium we collected. So the stock would really have to fall a lot before we have unrealized loss on that trade. In the worst case scenario, if we're forced to buy 100 shares, we simply just hold on to those shares and wait until it eventually rides back up. We can also sell calls with those shares to collect more money. If the stock doesn't fall and goes up, we simply collect the premiums, which can usually amount to 20 to 40% of the collateral you need. This essentially hedges our stocks against volatile and even bear markets. Okay, if all that doesn't make sense, maybe try rewinding a little bit and hearing through it again, or comment below and I'll do my best to answer your questions. Now let's talk about margin. Margin is basically money you can borrow from your brokerage if you need more cash to purchase shares. Most brokerages typically charge around 8% for margin, which can add up quite quickly. However, with one specific brokerage called Interactive Brokers, which is a public company that trades globally, you're able to access margin paying just 1.58% interest if you utilize their margin. So let's say you have invested $110,000. This part is overly complex to explain the numbers, but basically with a portfolio margin account, and depending on how you're investing, your buying power will be about $350,000 or more. That means you can trade stocks, or better yet in our strategy, sell year out put options with about $350,000. Now this is not to say you must borrow the $240,000 on margin. You would only use margin if you get assigned, and most of the time with more premium collected, the stock would have to fall a lot more before you get assigned. Now if you take the 20 to 40% premiums we're collecting a year out on solid undervalued companies, let's say we only netted 20% returns on a bad year because some stocks went down. That's still $70,000 you collected just from selling put options on the original money that you had put in of $110,000. So what's that magic number that you would need to have to hypothetically retire early using this strategy? It would be $110,000. Now is that a guarantee? For sure it's not. You can never guarantee anything in life. If you pick really bad stocks or just don't pick the right ones with somewhat decent premiums, you're not going to hit your goals. But at the very least, it's a starting point. A starting point that has a very high probability, in my opinion, to gain financial freedom with a lot less money than you would have thought. So what happens if I hit that number and I collect $70,000 a year, but I'm still only 35 years old? That's up to you. You can keep working, you can keep building more wealth, you can buy a Tesla, you can quit your job, you can start a side business, you can travel the world. Guys, that is completely up to you. I hope this video serves you well and unlocks freedom for you that you may not have ever imagined before. Make sure you like and subscribe for more videos, and as always, invest safe and live each day to the fullest.